Hi, and welcome to this stock analysis of Europris. Today, we will go through the main economy, for example, statement, balance, and their cash flow. A little bit of what I've expected from them, compare them a little bit to their competitors, some of the benefits and, negatives of what Europris actually is, and then to continue further a little bit what Europris will be in the future. So, what is Europris? Europris is a retail company. So that means that they are selling household goods like cleaning, kitchen, snacks, do-it-yourself products, coffee, outdoor, and in general seasonal products, which I will go a little bit deeper into. When it comes to low price, Europris is actually well known to be one of the cheapest providers or companies in Norway when it comes to retail, and they have built up this branding over years, and it's actually in general positive. When it comes to the seasonal stuff, their main priorities are Easter and Christmas, where Christmas is one of their biggest drivers for economy. They also do have the regular seasons where they change up clothing, colors, and product lines in general. So when it comes to the simple key ratios, their margin is at 10%. This is actually among the better ones that I found. I have compared it to Tokmanni, Axfood, Rema 1000 and Norgesgruppen. Most of them are around 3 to 6%, so they're doing a lot better. When it comes to the debt to equity, it's at 2.1. Here I would say Europris is not among the best. Personally, I prefer a lower debt to equity, basically less liabilities, right? When you compare it to others, for example, Axfood, it's a lot lower. Axfood is over 3, while Tokmanni and Kesko is lower. When it comes to the return on earnings, it's at 21%. It's one of the lowest return on earnings that I found with the compared. It's not the best and it's not the worst. When it comes to the earning per share, I would say that is actually very good. It's 23.81%. That is a very good growth when it comes to stock. One thing to notice though, their revenue have certainly not grown this much. This is results and the improvement of margin. So the margin have increased from 3 to 10%, basically 12% last year. So the margin have helped a lot here. They have been able to fix a lot of their costs. When it comes to their price to earnings, it's at 10. I would say it's a little bit high. Not if you compare it to medical companies, of course, but if you compare it to retail segment, together with the fact that they lost a lot of their competition during COVID due to the Swedish border being closed, it's going to be difficult to keep up the same growth and also to keep up, possibly even keep up the same amount of sales. I would say the price to earning is a little bit too high right now. You can normally find these kind of companies from 7 to 15 price to earnings. It's a little bit of a difficult one due to the COVID part and also due to they actually have done a lot of interesting acquisitions, but for now I would say it's a little bit too high for me at least. So how was 2022 to Europris? You can see here on the slide next here, at the year-to-date 21 to year-to-date 22, it's more or less the same. Though one thing to notice is that the net working capital have decreased a lot, so this puts a lot of pressure on their liquidity. So last year the liquidity year-to-date was 730,000, now it is 188,000. And that is something to just consider, that they are struggling a little bit more with the current liabilities, and their cash flow have in general just been weaker this year, with the exception of Total, of course. You can also notice that the entire 22 have been a little bit of a roller coaster. Of course, they have been able to provide good quarterly reports, which is why they have bounced back. They have more or less done a good job. Of course, they still experience increased cost and higher inflation as everyone else, though due to hedging their shipping quite well, they have had very few issues with that in the start of in Q1 and Q2. Their shipping costs have been increased a lot now, but they are going to go down again a little bit in Q3. They're going to go down again in 2023 a little bit. So not at the same level as the start of 2022, but well, Europris likes to have fixed rates basically. Another thing to notice is that their growing customer club is doing good. They are now currently at 1.2 million users, and those users do on average put in 3-4 euros more on each basket. So it counts, and it counts a lot, and it's basically a fifth of the Norwegian population. Other than that, you can go to the year-over-year growth. It is around 2.8%. It's not a lot of growth in there, especially if you add in the inflation, it's more or less negative, but they are doing okay. There is though a little caveat here, and a very interesting point I would say for every retail investor that should be noticed. If you're taking a look at Europris market update, they are taking out examples of how much percentage growth and how much decreases they have, and items that cost 1,000 Norwegian kroners or more, it has increased with 23%. So when it comes to the statement, Europris have managed to double their revenue. You can see from 2014 to 2021. You could see that they got quite the bump here in COVID, and that is even when they shut down a third of their stores. It's something to notice though, like the doubling. It wouldn't have been a double if they continued with slow growth they had here. So COVID have helped them a lot. It's just something to think about. Well, this is from Q1 to Q3 at the lower end here, and Christmas matters a lot, so it will be interesting to see what they're able to do. And if you compare it to Q3 in 21-22, it's slightly lower. So I think the revenue part is very interesting, and it shows if the current PE is actually worth it for Europris. Their results have been magnificent, 6 times growth. Their margin have been one of the best in the business since 2020, so they can be proud of what they have achieved here. You can see that it's difficult to keep it up though, and the shipping rates are almost twice as high now than what they were before in Q1, Q2 in 2022. So the shipping rates will be higher in 2023. How much it will impact will be interesting to see, and I do hope that they will be able to keep up their margin. When it comes to their EPS, they have managed to grow a lot. Well, of course, with the results going up like this, the earning per share should also. But just look at this, like they have done a really good job. So they started buying in some shares as well in 2020 and 21. So one of the things that actually helped the earning per share, but they have done really good when it comes to the growth here. And just remember the revenue, it's all a package deal, right? So an increase in revenue that is only doubled and a 6 times improved result, they can't keep it up in the end. The margin pressure on retailers is high, and if this margin continues to go up, it will put up competitors like Normal and those kind of things. It will just be more interesting to be in this segment. They will look more at what Europris is doing, and they will compete better. Remember, it's a package deal, and they cannot end up like the margin will be more and more difficult to improve. Each single year they improve it, at least in the retail market. I just really need to state that it's so important to remember. It looks good, and it is a really well done job, but they will not be able to keep it up over time. This might be the first roadblock. It might look worse next year. It might improve. Just think a little bit about that when you go into the stock. Don't expect fireworks next year, though they will probably be able to increase their sales. And when it comes to the balance, you can see that they have slowly been increasing their debt from 2014 to 2018, actually 19. Though they have, after COVID started, managed to increase it by quite a lot since then. It should be mentioned that they have started going in an upward trend again, and it will be interesting to see what happens after Q4, one of their biggest quarters, and to see if they are able to provide a little bit of cash flow here and a little bit of lower debt here. Historically, they normally do. When it comes to the lease though, it is quite high, and you will see in the cash flow that it is a little bit of a scary number that comes up. Nothing compared to the high numbers, but in year to date it looks a little bit scary for me at least. And you can see their total debt is for me a little bit too high. We're talking over 2 in debt to equity, which I'm not a fan of at all, but they are not the worst in the business with comparable retailers. So how scary it is? Well, it's up to you to consider yourself, right? When it comes to the equity, it have been increasing together with debt and everything, so they are able to at least improve their assets together with their debt. So that is good. And when it comes to their liquidity, so this is always based on whole year, right? Except for here, this is in Q3. It should be said that Q3 in 21 as well had 0 cash. I don't like it. It's low cash at hand. It is scary. A low liquidity is, for me at least, never a good thing. If you don't care about that, that is good. It's not a bad thing. They still have the overdraft. But for me, it's a little bit scary just in a way that, well, what happened if they don't want the overdraft? Those kind of things. So it's just my overthinking thing. And obviously this have more or less worked like this for Europris for a really long time. It just, yeah, I like to see more cash at hand. And when it comes to the cash flow, you can see that it's 5 times higher since 2014 here to 2020 to 2021. So that is quite a substantial increase in cash flow. It should be mentioned that in 2022, it's a lot more struggles, as you can see, though it lacks Q4, which is the strongest quarter. Though it should be mentioned that year-to-date 21 was looking a lot better. It was over 700,000 there. You can also see that the dividend have tripled, well, close to tripled at least, and is currently having a yield at 5.8%. to the current value. If they can keep up the dividend though, it will be a lot more difficult and they might need to take out debt to do it. When it comes to the investments, you can see that it has been somewhat varied, and in 2021 it increased a lot. This is where they did the acquisition of Recourses, and it's a big part of where Europris is going in the future. It's varied, and they have started using some more of their cash flow on buying up their growth. I would also like to mention that they have a very high finance cost. So you can see here the finance cost alone is basically the cash flow, and then you add in the investments. Quickly, the liquidity is going towards a negative. Of course, it's supposed to be closer to zero anyways when you take income and outgoing cash. And when you go into this year, like 2022, you can see total finance, right? This is with dividend, and it's also with leases. So they have taken up some revolving credit facilities at around 300,000. It was higher though, so they're slowly paying it down. It is a big part of it, right? It's like they have no liquidity. You can see here, right? Zero. The same last year, it was zero, but then revolving credit facilities was at 100,000. Now they're at 300,000. So obviously they're struggling a lot more with their cash flow this year. And well, I feel like their lease is quite high. It should be mentioned that 2019, that is more or less when they got their new storage facility, which is improving a lot of their costs. And within 24, it's expected to be a lot better even, but still it's just something to consider. We have come to the benefits of Europris. So they have made some interesting acquisitions, which will help their products and also sales in future. Recourses, Strikkemekka, and even Lunium. These acquisitions are pure play and gives Europris a small entrance into web shops. Pure play. Europris have always given more or less high dividend. Well, always might be wrong, but basically since they started, it has been a high dividend based on the value. And currently that dividend is above 5%. So going into the stock, you know that more or less you will be able to keep getting good dividends, of course, as they are able to keep the cash flow up and running. Europris have proven to be good during difficult times. COVID, now, sales are staying good and high. They're able to continue earning money when others are not, and have shown a lot of resistance to market fluctuations. They are well diversified, so you will get all from home supplies to fixing do-it-yourself car supplies, and this provides several incentives to go into their stores to shop and get more interesting items. It has been a reputation change in Europris. It has gone from negative sentiment to positive sentiment the last 8 years, especially COVID, and from being messy and cheap, they have now gone to cheap, candy, well diversified. They're more liked by the customer. They also have a lot of information that is trickling into their algorithms with customer data control. Like it's over 1.2 million users in just the Europris club alone, right? If you add in the acquisitions, they will easier have more information and know what products that are more interesting for customers. And this makes it a lot easier for them to, well, sell the right products in the right stores and add the right products in the right areas. So what is the downsides of Europris? Well, Chinese products. It's a lot of political risk with Chinese products nowadays, with the Taiwan area. And, well, you don't know what kind of reputation, what will happen in between Europe and China, or America and China. So it's a little bit scary there. They often struggle with the low liquidity. I know I've mentioned it, but it's so important for me because it's scary. I don't like when companies have low liquidity in their cash at hand. It can make it more difficult to get money when you don't have any. So it's a little bit more based on what will happen during these rough times, how banks will, okay, yeah, just take it, we trust you. Of course, that is what is happening, but it's just a little bit more scary because it looks like they are a little bit more dependent. Then it's also another issue with the low to no growth outside of Norway. Of course, their acquisitions are creating a little bit of growth outside. Recourses, for example, is in Sweden and Denmark, but Europris in itself is not. It's only in Norway, and well, the growth is basically in smaller cities or bigger cities and new locations in Norway. So it's not a lot of upside there. They're also dependent on seasons. So this means that if they do take in the wrong products, the products are not popular, for example, during Christmas, that will impact their cash flow and their statement quite a lot. First and foremost, the products that they will not be able to sell, they will try to sell next year. So if they don't do it good, well, that will be sitting there for a while, and it will impact even the next season, possibly. It's a little bit scary. If they do wrong, it bites them. Seasons are the biggest profit they have, right? So they also have a high volatility. You can see them up and down from 30 to 20 to 30 to 22, now up up to 70 and down to 40. It's really going a lot of up and down. Of course, it gives you a possibility for an entrance, but it also provides a lot of stress. So if you're the type of investor that is sitting there looking at the stock price, yeah, it might not be the best if you're buying it a little bit higher than what the bottom price is. It's also a little bit of a worry for me is the COVID growth expectation. During COVID, the Swedish border was closed, and all of Eastern Norway was like, yeah, now we need to buy cheap products somewhere else, and they chose Europris. Possibly not all of them, but at least some did. And will this keep up? Because the borders are open, and yeah, it's a very big price difference. Of course, now during the current crisis, the inflation in Sweden, from what I've understood, have been a little bit higher than in Norway, so the prices are more similar now. Together with the Swedish krona, it's a little bit more expensive than a Norwegian one, but still, it's a lot of money to earn if you go to Sweden for Norwegians. It's a little bit scary when it comes to that. Will they be able to keep up the sales, or will they slowly go back to the Swedish border again? That is something that we'll need to see over time. So where is Europris going forward? Well, Europris will continue with their pure play. That is a nice niche that they have found with their e-commerce, where they get a lot of nice data. They are able to grow outside of just Norway, and they also get more products, so they can order more products easier. So it's a nice way of improving their own business. They will possibly be experiencing some Swedish trouble with some of the customer flow going more towards the Swedish border again, as prices are lower there and people do like to get the choice of different products. They have also mentioned during their capital market presentation that shipping prices will increase. So Europris likes to have fixed shipping rates, and it expired mid-2022. That it went very high up, and that increased by quite a lot. Though now they have managed to change that fixed rate down again. It's still a lot higher than what it was in towards mid-22, though it's improving. There is also expected to be a little bit more electrical price increases, struggles around there. Though this will also, of course, depend a little bit about the European market, how that will work. Hopefully it will normalize and we will be able to get more energy, but we will see. When it comes to the efficiency and automation, that is a very important part. So Europris have gone down from 4 to 2 warehouses now, and it's going down to 1. It will be quite automated, but it's not there yet. It is expected that this automation will be ready at 24, and it's going to help a lot with their efficiency. I would also like to mention that they have managed to change their weakest stores and improve their margins from 1 to up to 11% EBIT. So that is something that is worth mentioning, and it's a good job. And it looks like this trend might be going better in the future as well. They have been able to improve the EBITDA margin with their worst selling stores. That have been a real nice change in efficiency, and this has been based on all of their work with removing a lot of the errors they have done historically. So the question is Europris overpriced? For me, it is a little bit overpriced, though if they're able to keep on giving 5% dividend, perhaps they're not. I still think that the Swedish border thing is very scary, and due to their current market increases, perhaps this segment in itself will be more interesting to other competitors. You have Rusta that might be coming in, you have Normal that is taking more marketplace. It's just things that can create a little bit of issue for Europris. And other than that, I would like to say that this is not financial advice for you to buy or sell Europris. I do hope that it helps you understand a little bit more about the company, and I would like to thank you for all the likes and all the comments that I've received. So other than that, cheers!